Politics, Our Worldview. Live on Facebook every Sunday from 5 p.m. till 7. It's the podcast about politics in Barbados, the region, and the wider world. Now, here are your hosts, Ayo and Terry.
Good evening, ladies and gentlemen, and welcome to Season 5, Episode 4 of our weekly live show, Just Politics, Our World View, where we discuss politics in Barbados, the region, and the rest of the world. Welcome back to our regular viewers, and welcome to our new viewers. Thank you for joining us. If you're new to our show, please note that you can find us here live every Sunday from 5 to 7 p.m. Also, if you missed this live show, you can rewatch right here anytime after or the podcast version on YouTube each week. I am your host, Ayo Olalara, with my co-host, Dr. Terry Harris. Over to you, Terry.
Thanks, Ayo. All right, so good evening, everyone, and welcome back. So this week, we'll be chatting with financial advisor Jamar Blackman on the topic, your financial journey. So please stay tuned with us for that. But first, a word from our sponsor. This week's episode is brought to you by JPOWS5EP4 Inc. You can contact them at 6240593 or via email at JPOWS5EP4Inc@icloud.com. For all your construction, renovations, and interior design needs, you can give them a call with your real estate questions, whether short-term or long-term rentals, to sell or even purchase your dream home. It's your one-stop shop for all things properties. Thank you again for joining us. Ayo, back over to you.
Thank you, Terry. Please note that you can also ask questions or contribute to the program with your comments. Simply type them into the comment section below or WhatsApp us on 833-9886 or email us at jpworldview@gmail.com. And you can join the conversation right here online with us. Just send us an email and receive your link. And if you're here right now, please click like, share, and turn on your notifications. All right. So, first order of the day for Hot Topics, Terry. First thing I want to do is say congratulations to friend to the show, Senator Dr. Christina Hines. She's been appointed by the president along with another gentleman. I don't remember his name right now for some reason. Anyway, so yeah, that's great for her. But what I want to discuss with you, Terry, what are the implications for the Democratic Party and what are the implications for the lower house in passing bills? Does it change? Is it affected? Are they affected? What are your thoughts?
You always give me the very mischievous questions. But yes, like you, first, congratulations with Senator Dr. Christina Hines. Of course, is a major achievement. And of course, you know, she's a friend to the show, and we are very happy for her, and we look forward to her contributions in that place.
Yep.
All right. So to your questions as it relates to the implications for the Democratic Party, as far as I'm concerned, I know that others may disagree, but it's a tremendous, the idea that we would have another election and the Democratic Party will not be represented at all in Parliament, to me is just another disaster for them. Right? To me, it's a disaster. They really played their hands really poorly, in my opinion. They really should have, in my opinion, supported the legislation that would have meant that they would have been given the opportunity to seat two senators. They did not, for whatever reason. I think it's a massive mistake, or you know. So so now they will be out of Parliament for the foreseeable future, unless there is some by-election. You know, they have to wait for 5 years, and it's not good for them. Of course, it's not good for the country because, you know, we have 30,000 people voted for the Democratic Party and they're not represented in Parliament. And that's a problem for me.
But yeah.
Yeah. Go ahead. You want to say something?
No, I'm listening to you. I'm agreeing with you. Go ahead.
Oh, well, yeah, that's really all I want to say on that. Yeah, so the implications aren't really good. We now have the government senators and independent senators, and of course, you know, the two new senators are going to be independent, as they've indicated. So they're not necessarily going to toe one particular line or the other. They'll be independent, and so the Democratic Party's perspective on issues will not necessarily be reflected in the Parliament, and this is obviously problematic for them and for the country.
Yes, we'll wait and see how that turns out. I'm just happy for Dr. Hines right now. I'll deal with all that later and process that a little later
Well,
and what that means.
yeah.
Yeah. Okay.
Mhm.
Also, congratulations to Justice Ketanji Brown Jackson. She's been confirmed to the Supreme Court of the United States of America. There's been a lot of conversation around this also, this appointment. You know, people questioning why do people think it's so monumental, and you know, why must we always say yes, well, it's the first Black woman. I mean, but isn't it monumental, Terry?
Of course it is. I mean, what I don't know what's more disturbing, the fact that people are asking these questions. So why are we celebrating the first Black woman justice, or the fact that we, after how many years has America been in this country? Like 200, 200
years.
years. We're now having the first Black woman justice. This is actually very shameful. But anyway, so yeah, obviously we actually should not be in 2020 or 2022 having these Black firsts, right?
Yep.
We shouldn't have Black female first. We shouldn't be having these things still, because I mean, at this point in time in the history, but we are, and the mere fact that we are means that things are not quite right, and we have every right to celebrate the first, because if she wasn't the first, then we wouldn't be celebrating it as the first, right?
Hopefully it wouldn't just be the first, but after this, hopefully there'll be others. Not just the first and only, but hopefully there are others coming after her. And that's what is important about being first, because you open the doors for so many others to come through. One of the things that struck me about her appointment was when they shared, someone shared the photo from her. You have it on the screen now, from her yearbook, when she said, I want to go into law and eventually have a judicial appointment. That was so striking to me, because we're always talking to our children about the importance of setting goals, the importance of not just setting them, but working towards them, and doing everything within your power, as long as not illegal, to achieve those goals. And I think that this is such a perfect example of a young teenage Ketanji Brown, setting a goal, and now all these years later achieving it for the whole world to see. I am extremely proud as a Black woman, even though it don't really affect Barbados and anything, but I am extremely proud to see it as a Black woman.
Yep, congrats to her. And yes, goals are important. The only way to achieve anything meaningful in life is to set goals and then devise a strategy to achieve the goal. So goals are definitely important.
Yeah, congratulations to her. And I am having a ball this evening, all these congratulations, because they're all women too. So and congratulations.
I wonder who set up this show. I wonder who thought up hot topics. Anyway, yeah.
Yes. Also to another Barbadian woman, Black woman, who continues to make all of us proud. Her Excellency Robin Rihanna Fenty has debuted on the Forbes list at the value of $1.7 billion. Rihanna, as we all know, took the music industry by storm over a decade ago. Most of us can still remember, what was it? Island in the Sun. What was it again?
I just remember the songs. Umbrella.
Yeah,
Umbrella.
that wasn't the first, but okay. It wasn't that soon. Yeah. But she since added to her fortune through her Fenty cosmetic line and the similarly named lingerie line, both of which operate under the idea of inclusivity, which obviously is a winning formula. It's making her very rich, because she has something for everybody. So entrepreneurs, there's an idea, inclusivity. As a Barbadian woman, I'm extremely proud. I cannot wait, as my friend Cassandra said the other day, to welcome Barbados's godchild as she becomes a mother for the first time. Congrats to her. The international press is reporting that she's the first Barbadian billionaire. And I have to admit, I did question this. Is she just the first that they know of?
She's certainly first on the Forbes list. So let's just leave it as that.
We don't know how it looks.
Let me just leave it right there. She's the first on the Forbes list. Leave it right there.
There you go. So congrats to her. I'm extremely proud. And she's still very young. So, she has so much more that she can do. And moving right along, Will Smith has been banned for 10 years for slapping Chris Rock at the Grammy Awards ceremony. However, did resign before the ban, and he has reported that, or it is reported that he said that he stands by the decision of the Grammys. He's also checked himself into an upscale facility to overcome his issues. So that's that on that for me. Terry, I don't know if you want to
We can move on. We can move
move
on. The
on.
slap scene around the world. I think we spent exhausted enough time talking about this.
I think so too.
Mhm.
Okay, let's move on now to the war in Ukraine. Again, this week, the war in Ukraine continues to cause major economic fallout around the world. As most of you, if you've been watching, you would have noticed that I choose to talk about the war in terms of its economic implications, because I feel like that's the way that most of us, this side of the world, really are affected by it. Um, JP Morgan has reported that the bank itself could lose about 1 billion of its Russian exposure. That's according to the chief executive officer Jamie Dimon, as he delayed the extent of the potential losses from the conflict in Ukraine. He called for the U.S. to increase its military presence in Europe and reiterated the call for it to develop a plan to ensure energy security for itself and its allies. And whilst he did not provide a time frame for JP Morgan's potential losses, he expressed concern that the secondary impact of Russia's invasion of Ukraine on companies, concerns about the secondary impact of Russia's invasion of Ukraine on companies and countries. Damon also said that America must be ready for the possibility of an extended war in Ukraine with unprecedented outcomes, or rather, unpredictable outcomes. Sorry. In essence, he said that they should prepare for the worst and hope for the best. And I think that, of course, he's warning the US, but who's warning us? So we have to take these warnings to really include us as a small, open economy. But we'll get to that. The Central Bank of Russia announced that the ruble is tied to gold. Terry, I want you to tell me, is this true? And if it is, what are the implications for the dollar right now?
Um, yeah, implications for the dollar. The ruble is tied to gold. So that announcement is true. I think, well, just to share the graphic here that we have, um, the the ruble, they're now the central bank of Russia is now going to exchange 5,000 rubles for 1 gram of gold, and this is effectively, obviously, setting a floor for the ruble, because it's going to create demand for the ruble, as individuals seek to maybe purchase rubles or maybe sell gold in order to get ruble. It presents an arbitrage opportunity. If you're in finance, you understand what that means with respect to the ruble, gold, and the US currency. So yeah, so it's essentially setting a floor on the ruble, and effectively creating a gold-based exchange rate of 81 rubles for $1. Which is kind of around where the ruble is trading right now. So it's kind of trying to set a floor. The objective that the central bank of Russia seems to be trying to do is to maintain the purchasing power, or to maintain the exchange rate of the ruble. So by creating demand for ruble, so you will notice that they're asking the West, well, this list of unfriendly countries, really, the Western countries are imposing sanctions on Russia. They're asking them to pay now for gas in rubles, again creating demand for the ruble. By now implementing this exchange rate, well, this gold to ruble exchange of 5,000 rubles to one gram of gold, they're effectively again creating demand for rubles, because now people can buy up rubles and exchange them at the central bank in Moscow for gold, right? And then take that gold, maybe sell it in the West, take delivery of the gold, sell it in the West for dollars, and then use the dollars, to repeat the same process. So this arbitrage opportunity that's being created. And of course, if you're again in finance, you will know that arbitrage opportunities should not really exist. And so effectively, they're setting a floor on the ruble.
Mm-hmm.
nice tactic. But we'll see how it works out next week.
Interesting.
Sure, I
Um,
will.
let's talk about the international relations implications. Though
Mhm.
I'm a student of international relations, and I've always queried the idea of sanctions against powerful nations. And this idea about the concept of mutually assured destruction. And I wondered if it's really enough to keep these countries in check. And I mean, are we seeing it played out? Do you think in real time? What do you think will be the possible outcomes?
Hopefully not World War III, or although we think some individuals are arguing that we're already living within World War III, but hopefully not that. I really don't know. I am not a clairvoyant. I don't know what the future holds, but I do know a couple of things. I do know that the sanctions war that we currently have, sanctions don't seem to work.
Mm-hmm.
Cuba has been sanctioned for over 60 years. We've not had regime change in Cuba. Venezuela has been sanctioned for a while. No regime change there. Um, well, sanctions don't seem to work. They don't seem to change the behavior of countries. And I think imposing the sanctions on Russia, if sanctions are not going to work for 6 years on a small island like Cuba, I really don't expect sanctions to work on the world's largest country, which is
Yeah.
Russia, which
Mm-hmm.
is self-sufficient in the staples that people need, right? It's self-sufficient with respect to energy. In fact, it exports energy. Self-sufficient
Mm-hmm.
with respect to food. In fact, it exports food. So by sanctioning Russia, you effectively have sanctioned the individuals who receive delivery of energy and individuals who receive the food from these same said countries. You've essentially sanctioned us, right? So, yeah, it
So
wasn't going to
in
work.
that respect, then that's mad. Mutually assured destruction,
It's
right?
pretty mad. It's pretty mad to cut off your own nose to spite someone else's face. That's pretty mad. But yeah.
Mm. Yeah.
Mhm.
Anyway, we're gonna watch that stage. What should Terry leave right there, Wayne? Okay, yeah, that was the story before. Got you now. Alex is saying that there's a lot of feedback coming from you, Terry. Alex, let me know if it's still happening. Um, yeah, but let's move into Pakistan. We've not talked a lot about Pakistan on this show ever. Um, but according to Al Jazeera, oh, he said it was brief, so no, you're fine.
Okay, great.
Imran Khan last Sunday became the first Prime Minister of Pakistan to be ousted through a vote of no confidence. On Monday, the lower house will meet to vote in the new acting PM. The motion was passed after the country's Supreme Court ruled that Khan, who came to power in 2018, acted unconstitutionally in previously blocking the process and dissolving parliament because they had to try again to actually have him ousted by no confidence. The first time he was successful in blocking them. Khan alleged that the opposition colluded with the US to unseat him and called on his supporters to stage nationwide rallies. This is last Sunday. Of note, since its independence in 1947, no Pakistani prime minister has completed a 5-year term in office in the country. And I don't know if any of you have ever watched Pakistani's parliament in action, but it's so um, exciting. People are fighting, they're tossing, they shoot at each other. It's like
It's your
spirited.
type of place. Your type of place, Ayo. That's that's your type of place.
Let's just say they know how to act in polite company.
Okay.
Anyway, in terms of Khan's downfall, though it is reported that inside Parliament, his party lost the support of coalition allies, so he didn't have the majority that was needed to defeat the vote of no confidence. And outside of the Parliament, he has lost the support of the military, which incidentally guaranteed his 2018 win. However, there's been some public fallout over senior military appointments and policy decisions since 2018. So, we know how this goes. People don't get what they were promised and back and out. It is also being claimed, though, that a deepening economic crisis contributed to dissatisfaction with Khan, as double-digit inflation dogged the majority of his term. And they're also now saying that Shehbaz Sharif, who is the brother of the three-time Prime Minister Nawaz Sharif, is widely expected to replace Khan when I think this will be on Monday, tomorrow, when the vote is made to have the interim PM. But Terry, what are your thoughts on this? And it's interesting that they actually mentioned the inflation, but I'm wondering, is that like a side argument, or is it really other things? Because if that is a main argument, it would argue for it would be something that other leaders around the world will have to watch out for. Somehow, I think it's a side argument. You go ahead, Terry.
Oh yeah, no, I'm very, very skeptical of that argument that he was ousted simply because of the economic conditions in Pakistan. No, I am more apt to believe that he was ousted because he dared to pursue independent foreign policy for Pakistan in recent years, and unfortunately, he also found himself in Russia on the day after they launched the invasion of Ukraine, which the optics there don't look good. But of course, he is pursuing a very independent foreign policy, and of course, there's some individuals, particularly in the US, but also in Pakistan, who do not like that idea. They would like to prefer alternative foreign policy. So I suspect he was ousted because of that, and we will now have an individual who did not get the support of the Pakistani people in Elaine Shearer now as the prime minister. So, yeah.
We'll watch that space.
Yeah.
As with all other spaces. Anyway, here ends Hot Topics, Terry. I'm going to let you bring your guest on air. 17:31 now. Yeah.
All right, so this week we have Jamar Blackman. So Jamar is the founder and lead insurance financial advisor at Blackman Insurance Agency Inc. For over 2 decades, he has worked within the financial industry and amassed significant experience with established and major participants in the insurance and financial services industry. Jamar is a financial services certified professional and holds other professional designations within the industry in an effort to continue to provide sound advice and excellent service to his clients. He is also pursuing additional designations such as the Chartered Financial Consultant and the Chartered Life Underwriter certificates. So Jamar, welcome to the show.
Hi, good evening, everybody. Can you hear me well?
We can hear you well.
Okay,
Welcome to the show, Jamar.
Thank you, Ayo, and thank you, Terry. Good evening to the audience. How's everybody doing?
Yeah, they're good. They'll let us know in the chat.
Okay,
good.
Anyway,
looking forward to this financial journey discussion. So just to put everything on the table. So Jamar helped me with my own financial affairs. Everybody's called Money Man Tez is what you call me, right, guys? But Money Man Tez needs a professional that knows what he is talking about, right, and knows how to organize his affairs. So just put that on the table.
Doctors don't treat themselves, so
Exactly.
There you go. But I always trust the doctor that my doctor goes to a little better. But anyway, right, Jamar?
I never thought of that, actually. Doctor, who's your doctor?
Anyway, but before we get into the conversation, I want you to tell us a bit about yourself personally. Introduce yourself to our guests.
Okay, so as Terry would have said, I am Jamar, and I've been in this industry for quite a long time. I actually started very young while going to school, and I just love the industry of insurance. So over the last couple of years, I would have worked with Sagicor, and now I am out on my own, and I have opened Blackman Insurance, which is an independent agent for Sagicor, a Sagicor group of companies. So what we've done over the years is that we've actually helped clients to realize their financial goals and how best to mitigate exposure to financial risks and through financial planning. So that's basically what I do on a day-to-day basis. Outside of that, I am a very chill person. I haven't been doing much recently. because of COVID and whatever the case may be. But I do love to travel. I do love Carnival, especially in Trinidad and Barbados. And
Carnival or Crop
I love both. I love both. I have my opinions on both, on which aspect of each carnival or is better than the other. But yeah, I do love both.
Okay.
Yeah.
Lovely. So you jump. What is it you do for carnival?
You play mass in
You
Trinidad.
play mass or you jump?
Believe it or not, that is actually what I prefer in Barbados. I actually prefer to jump for crop over Kadooment Day in Barbados as opposed to playing mass in Trinidad. I know that will raise a lot of red flags, but I think that the crop over Kadooment Day, is a lot more enjoyable than the 2 days of carnival in Trinidad, because it's a lot more action packed. It's more the adrenaline is up and from start to finish. But when you're playing mass in Trinidad, to me is a little chip and a wine here and and a sit down and eat food. I was like, who got time to eat food? So they pace themselves down there.
Yeah. Anyway, let's move on to the conversation. My audience
Yes.
is urging me along too. So I'll get your questions soon, Wayne.
Oh, we have questions ready?
Yes, man.
Oh, wow. Okay.
So tell us a little bit about your organization and what it is exactly that you do.
Right. So as I would have said earlier, Blackman Insurance is an independent insurance agency. And what we do is that we help people to understand through the financial literacy courses how best to plan their personal finances, how best to mitigate against financial risks, and how best to plan for wealth accumulation as well. And as you would appreciate, in Barbados, financial literacy is not taught in schools. And that's a big question. Why not? Because, a lot of people would be a lot further if they had the knowledge that they should have, right? And another thing that I have recognized is that individuals may have a hard time putting the pieces of their jigsaw financial portfolio together. And by that, I mean a lot of our financial services here in Barbados, they're decentralized, where you go to the general insurance company for your car insurance, you go to the life insurance company for your life insurance, you go to the banks and the credit unions for other services, right? And you have all of these things going for you. You may be going to the wealth management company for your wealth management services as well. So you have all these different pieces of your puzzle scattered all around. But what I try to do at Blackman Insurance is to put all of that together through our proprietary software. So if you should schedule a financial checkup with me, I go through all aspects of your financial journey, and I put it all together for you in one report so that you can see everything. You can see your plan, you can see where you are, where you want to be. And I also would give my advice as well. So my recommendations in that report. So in essence, what I do is provide sound solutions through insurance planning. We also do mortgages and land loans, mutual funds, and provide plans like the one that I just discussed with you.
Wayne is asking how many members are on your team.
So we are a very small team right now because I was at Sagicor for 9 years, and then after that I opened Blackman Insurance in 2019. So Blackman Insurance is only 3 years old, and we have a team of 2. So we were a brick and mortar at first, but then when COVID came along, I actually closed the business. I transitioned into a virtual business. So now we do everything virtually, and I actually think that that's a good thing because I can access more people, and it's a lot more convenient to do the consultations as well.
And we've gotten lazy. We really don't want to leave home right now, Jamar. I'm not gonna lie to
Right.
you.
I am
want all
saying,
this online. There are people who are saying I'm tired of Zoom. I'm not.
Who's these people, Ayo? Speak for
I
yourself.
trust me. There are people telling me they're tired of Zoom. They want to meet in person and so forth. And I get that, but I'm
yeah,
good.
it's a lot more convenient, I find.
Yeah.
Because I would say I didn't have any intentions of closing the office. But then when I went back after May reopened the country, I recognized that a lot of people,
after be at Europe. Okay, yeah.
yeah, a lot of people preferred to do the Zoom meetings for obvious reasons. I did too. And then I realized that the light bulb went off. I was like, "Whoa, why are you paying for a brick and mortar when I could just do this virtually?" Right. So I think it's a lot more convenient, and you can get a lot more done doing it that way.
And you save a lot of time commuting, and you have a bit more hours to sit and just talk rather than travel an hour to talk for 30 minutes. You can talk for an hour and 30 minutes.
Yes. Yeah.
With being professional. Alex Fenty saying, let me give a big shout out to Jamar, who has been my agent for a good few years now. That means that you're doing your job. Otherwise, it wouldn't be a shout out. It would be a cuss out.
It would be a cuss out. Yeah. Yeah. Hi to Alex. Yeah. I know Alex well.
All right. Terry, you want to pop in here? Or you want me to continue a little bit before you move into your presentation?
Oh, I mean, I guess I could pop in as.
Yeah, because I feel like I've been talking all evening, so you go right ahead.
Ayo, come on, be serious. We know that you could talk all day, not all evening.
I'll talk, but anyway.
All right, so Jamar, what are the insurance and financial services solutions that someone like yourself can help individuals with? So you've talked about financial literacy and the importance of it. So say, we have a person, they're not as financially literate as maybe they would want to be, or you would want them to be. What are some of the solutions that you can provide them with?
Right. So I actually, with everyone that I meet with, I actually go through a 5-step process with them. So every part of the financial journey may not be applicable to you right now, but I still want you to be aware of what is there to come, right? So we will cover your financial risk management and insurance planning. I call that the foundation of your insurance solutions. So you want to make sure that your foundation is sturdy before you actually explore other solutions and recommendations, right? Then I also cover debt management if there's any debt. We also go through financial planning for home ownership in the event you want to buy your own home or you want to buy a piece of land. And then we also go through wealth accumulation and investment management. And lastly, wealth distribution and estate planning. So this entire 5-step plan will encompass everything that you would need to know and do throughout your financial life. Right.
All right. So let's take these in turn. So can you give us some more details about the first one on that list? Financial risk management and insurance planning. What is that all about, and how can that help individuals to be more financially, stable?
Yeah. So the financial risk management and insurance planning section deals more with what do you need to do first, right? So before you can think about anything else, think about what you do first when you build a house. When you build a house, what you do is that you dig out the foundation and you make sure that foundation is strong, right? So making sure that you can protect yourself against any financial risk is very important. And some of these risks may include your mortality risks, morbidity risks, your disability risks, your longevity risks, and property and loss, right? So when I say things like that, people may ask, what the hell am I talking about? So, for example, for your mortality risk, you want to make sure you're getting some feedback from me, or that's from somebody else?
That's Ayo, as usual.
Oh, okay. All right. So for your mortality risk, you want to make sure that you have a life insurance policy, and that life insurance policy will cover your family in the event of your untimely death, so that your final expenses, any debt that you may have, estate expenses, will not fall on your loved ones, and will not burden them financially in the event you're not here. But life insurance also has living benefits. So you can use your life insurance policy as collateral for a mortgage, or you can actually use that policy if it has cash values for emergency spending. You can access your cash values easily for that. And we will also look at health insurance. So what happens when you need health care? And as you would know, health care in Barbados and around the world is very expensive. So you don't want to be in a position where you need health care and you cannot, one, afford it, and two, you cannot afford the best care. So we're talking about stuff like hospital care, air ambulance services, mental health services, prescription drugs, dental and vision services as well, right? You can stop me anywhere along the line if you want to ask a question, but I'm going to generalize a lot of this stuff because it's a lot of information to take in, right? So,
Okay.
Go ahead.
No, you
No,
go
I
ahead.
was.
Oh, I go ahead. Okay. All right. So then you also want to cover your critical illness risks. So what's this? The World Health Organization did a study that states that 8 out of 10 Barbadians are at risk to severely being impacted by non-communicable diseases. So a critical illness fund will help you to mitigate that risk financially. So if you're diagnosed with a non-communicable disease such as a heart attack, stroke, cancer, kidney disease, to name a few, you will have the money that is necessary to, one, supplement the health insurance policy, which only pays for health insurance, health-related expenses. And two, you will be able to, while you are recovering from that NCD, you'll be able to still pay your rent, pay your mortgage, pay your car loan, buy food. If you need to make any renovations to your home in terms of like a wheelchair ramp or anything like that, you will have a lump sum of money that will be paid out to you in the event of the diagnosis of one of those illnesses. So then you will also go ahead.
When I'm talking to financial advisors, the question I always answer at this point is, how do I decide how much that money is going to be? How do we decide that?
That is a very good question. So what I do is that I do a standard of at least 5 years, 5 times your annual salary. Right? So what we would do is that we would take your monthly salary and multiply it by 60. And that would at least give you a standard of what your critical illness coverage should be, so that you would know if, Lord forbid, you are diagnosed with a NCD, you may have a stroke, and that may put you out of work for a number of years, that you at least have your income, you're securing your income for at least 5 years. If you want more, that's fine. But I will always advocate to do at least 5 years of your annual income. Very good question. Likewise, segueing into your accident and disability coverage, I do the same, 5 years of your annual income, right? So in the event that you lose a limb or lose an eye, or you become permanently disabled, and by disabled, I mean you cannot carry out your normal course of work, you will not be paid. So you want to make sure that you can at least secure your income again in the event of an accident or disability, right? I think motor insurance and home insurance contents are pretty self-explanatory. You have a home, you have a car, you want to protect your asset in the event of an accident or any peril, like such as a hurricane, flood, storm, fire. You have the necessary insurance in place, property insurance in place to protect your asset in the event that there's a loss. So
why can't we have contents insurance without having the home insurance?
Of course you can.
Really?
Most insurance companies would require that you have at least $20,000 of contents to insure first. So there's a minimum limit, but as long as you have $20,000 or more,
She got more than that.
I have to go back to my insurance company because, anyway, we'll talk.
Okay, no problem. So that I think that's pretty straightforward. Motor and home insurance, contents
A
insurance.
home is a given. Don't get it wrong.
Home
Home is a given.
home is a given.
Let me mislead people.
And motor is mandatory by law as well, right? Again,
Ayo.
I could I can dive into these subtopics and talk for an hour, but I'm just brushing over just to get through the presentation.
It's okay. Tell us a little, because with motor insurance, everybody has motor insurance because we have to have it. And Terry, I have motor insurance. Excuse you.
Of course you do. Of course. I never said
you give the wrong impression. Let me just put out there.
I never said that you were driving around without having paid your insurance. I never said that. Ayo.
Anyway, when does
You
one
would never do that.
when does one lose the ability to have comprehensive insurance?
It depends on the company. Most companies would restrict the comprehensive insurance benefit either after the car turns 10 years or if the value is $10,000 or less. So it depends on the company. Some companies stick to the 10-year rule and don't consider the value of the vehicle. Some companies look at both or either or. So it depends on where you're insuring the car. Yeah.
Okay. And explain third party, because I know some people might not understand third party. Most people understand comprehensive. It's comprehensive, as the word states. Explain third party.
Well, third party insurance is let's think of it as the basic package. So that is what is mandatory by law. You must have at least third party insurance or comprehensive insurance. So what the third party insurance coverage would cover is the third party. Anyone else but yourself and your property. So if you get into a motor accident and you damage someone's car, their guard wall, you knock down someone, the insurer would pay for the repairs of that car, guard wall, or injury to the person that was struck. So in that event, if your car was damaged or you were damaged, you were injured in the accident, there would be no compensation for you or the vehicle. So that's basically.
Is that only if it is my fault, or is that if it's anyone else's fault? If somebody hits me and I'm a third party.
If someone hits you and you have third party insurance, that person will either have third party insurance and or comprehensive insurance. If they're at fault, their company will cover the benefit for you, cover your damages. When I say get into an accident with a third party, I mean if you got into the accident and you were at fault, then you do not expect any compensation. You will only be able to
make it clear.
Yeah.
As Wayne is saying, it depends on where the liability lies.
That's correct. That's correct.
So why is insurance as an entire concept, why is this important as a tool for risk management?
Because the long and short of it, to give you a very short answer, is if you don't have it, you find yourself in financial ruin. You could find yourself in financial ruin, right? So think of if should the worst happen. So think of I will paint a very bad scenario, but think of you sitting at home one night, right? You're sitting at home in your house one night. Your car is not insured. You do not have health. You do not have health insurance. You do not have life insurance. You do not have home insurance. You're not insured. You don't got any of these things, right? You're just sitting at home comfortable. You turn off your TV and you went to bed, and then a freak storm hit Barbados. Sounds familiar, right? So this freak storm hit Barbados and ripped off the roof of your house. Your gap was flooded with water, and then your engine stalled because of the flood. In terms of your car that's parked outside. When the roof was ripped off of your house, a missile came into the house and struck you, right? or ripped off your arm.
Not a Russian missile, but you just need like a 2x4 flying around.
A 2x4 flying around and injured you, right? Then you need emergency care. No, think of that scenario. That's something that's very real, and that could happen to anyone at any time. So, how are we going to repair the house? One, how are we going to buy a new engine for that car? And how are we going to afford to fly to Miami to get that arm, reattached? Because for some reason it can't be done in Barbados. I know that is a very elaborate story, but think about putting yourself in that position and not having any form of insurance to cover any of these perils. You can put yourself in financial ruin. You either have to ask your family and friends for money. You got to go and borrow money. You got to host a charitable event, or your house will just go along, your car will go along, and you can go along too. So to answer your question, Terry, that's why it's so important to make sure that your financial foundation is so strong, so that if anything should happen to you, you would have the means to fix it without having to, rely on anyone else.
Can I answer a question?
Go ahead.
It may sound cheeky, but it is a real it's an experience that a lot of people have with insurance. There are people who say, I ain't done insurance. Insurance is a scam. I get car insurance because I need to, and I get third party and get nothing else. Because when you say it happen, they don't want to pay you.
Yes.
Let's talk about that.
So you want to talk about
reasons that your policy may not be paid, or may not be paid as you expect them to be paid. Should you go back and check your policy? You have a life insurance policy that you were paying $100 on, well, health insurance. You're paying $100 for until you were 19 and making $1,800 a month, but now you are 35 and you're making $16,000 a month, but you're still sending the same $100. I mean, should you be, re-upping your plan? Should you be doing these things? You tell me.
So I know that's why I have a job. and that's it in a nutshell, because people need advice. You're very right. You bought a policy 20 years ago and you expect, even though the cost of living has gone up tenfold, you expect that $20,000 policy can do something for you or your family. You got bad advice, or you just went into a company and bought a health insurance policy. You didn't check the deductible. You didn't check the lifetime maximum. You were sold a policy with a very low lifetime maximum and without knowing the implications of such. Or you for your home insurance, you either underinsured it or did not increase the value of the home insurance. And then if there is a peril and you have to pay that 2% excess, one, you can scream because no one told you about it. And two, because of underinsurance, now the insurance company is telling you, well, the roof blew off, but you're underinsured by 60%. So we can't pay you the full replacement cost of the roof. And then you ask yourself, but if the roof costs $30,000 and the coverage is $200,000, why you can't pay the $30,000? But the reason is because the house is now valued $400,000. You get what I'm saying? So there are a lot of implications that can reduce a benefit or stop someone from getting what they think they deserve. But I would always advise that you align yourself with a good financial or insurance advisor who actually knows what they're doing and talking about, not just selling a policy. And you do frequent reviews with that advisor so that you will know that your policies are up to date and they're adequate.
How often should you do a review?
Okay, so this is the thing. I suggest to my clients, if my clients have covered the entire covered step one. So what I do when I meet with my clients is that I go through every single element with detail. So I would calculate how much life insurance critical illness insurance, health insurance, disability insurance, and I go down the road that you need based on your current circumstances, based on your income, based on your family situation, based on your financial goals, right? So all of these things are factored in. Now, once I have recognized that the client, because I do have some clients that have all of these things covered, and to the levels that they should have them covered at. Once I've recognized that that client has done that, I will meet with them every 2 years. But if the client is still, getting it together, I will meet with that client once a year. Right? Yeah.
Okay. Excellent.
Mhm.
Go ahead, Terry.
Oh no, I was just going to make a comment with respect to the whole concept of risk mitigation and insurance.
Yeah.
Individuals, it's important to just, of course, it's all a part of financial literacy, but
Yeah.
just think of it this way: if you can't afford the loss, then you need to try to mitigate against it. And insurance is just, I mean, I'm not trying to sell insurance, obviously, because I don't sell insurance, but insurance is just one way of ensuring that, to use that word again, that that you can try to mitigate against this particular loss, right? So I just wanted to make that one little comment. All right, so Jamar, I don't think you got to talk about emergency savings as a mitigation strategy and the cash management and budgeting. So I'll just let you touch on that. No.
Oh yes. So emergency savings.
Mm-hmm.
Right. Oh yes. So emergency savings. So back to mitigating against risk. So emergency savings is a fund that you should simply set aside for unexpected events to avoid, one, living from paycheck to paycheck, and also to make sure that in the event of the loss of income, significant illness, loss of property as a result of a motor accident, natural disaster, all these things that we have covered before, that again, it wouldn't put you in financial ruin, right? So when we are talking about your emergency savings, what I use as a base is that you should at least have 6 times your monthly expenses set aside, right? And you also should include stuff like your health insurance deductible, your motor and home insurance excesses, because an excess, for example, a $500,000 property. So say you had your home insured and your home was insured for $500,000, your excess on that is $10,000. So if you had a total loss on your $500,000 home and you've been paying your premiums every year, and then Mr. Insurance Man come tell you, in addition to the premium, to rebuild your home, you need to pay $10,000, and you don't have that in emergency savings. What are you going to do? Same thing for motor insurance. You get into an accident, you have comprehensive insurance. Your excess is $1,000, but the insurer will tell you, before we can repair this car, we need you to pay $1,000. And same thing for health insurance. You have annual deductibles, which can range from $500 to $2,000. So I always advocate that when you're thinking about your emergency savings, you put aside at least 6 times your monthly expenses, and also factor in those excesses and deductibles.
What about factoring things like if you own a home, you have these annual expenses like the insurance you have to pay. You also have like land tax. Well, we'll see how much land tax is this year, but you have things, insurance like that. What about also thinking about factoring those things into emergency saving? Because I mean, it's all well and good to think about the monthly insurance, but you do have annual expenses that you need to be budgeting for.
So you can set aside a fund. So that was actually you got ahead of me. So I was going to no problem. I was going to say, like, separate your savings into at least 2 accounts, if not 3. So one account would be your checking account, and that should at least have 1 month's worth of your monthly savings, right? Right. So if you have your direct debits coming off and you have your bills to pay, etc., so that you wouldn't be living from paycheck to paycheck, you at least have that 1 month there that takes care of your monthly bills, and then when you get paid, you replenish it, and you continue to replenish it. The other 5 months of this emergency savings, you will put on a credit union account, right? And you will continue to grow that credit union account till you reach that 5-month mark, right? But I will also say that you have another fund that you put aside for those annual expenses. So we're talking about your motor insurance premiums, your home insurance premiums, putting aside money for the grease trap man.
Important.
No,
when you're a homeowner, that's important.
It's important. So put aside money for your land tax, you know, stuff like that, so that when next year comes, you will have that slush fund there to pull from to take care of these annual expenses. Some people do meeting terms for this, but
Right.
Yeah. Right.
But you're saying that the emergency savings is also something that you offer, a product that you offer?
No, that's not a product that I offer. Okay. If it was to look at the listing here, I offer life insurance.
Are you like you want your money or
no? I'll tell you why I asked that question. I remember my very first accident in my 20s. I've not had a lot of accidents.
Oh please! Oh. I know you for a while.
Good evening, Sandy. Welcome. Yes, Wayne, we should read on the Sandy fine praise. Anyway, continuing. My first accident, I was very surprised that I had to with a
this
brand
is the first
new
or the
car,
second. This is the third accident. Which
I had to front money to get made right, because I didn't understand the concept. I was young. I didn't understand the concept of what do you call it again? What's it? One? Help me, Jamar.
Which are you talking about?
You get in a car accident, you have to
the excess.
The excess. You have to pay the excess up front. And I didn't understand the concept of that.
Yeah.
Right. And I've often thought over the years that insurance companies should literally offer a product where you're paying you pay a certain amount of money. They have a fund or something. So if your excess is going to be $5,000, you can have the option to say, well, you pay this amount in, and it's there.
To encourage people like you to get into accidents.
No, I'm saying the excess is already there.
Okay, so to answer your question, I do not know of any insurance company that has zero excesses for comprehensive. But I do know, like, for example, if you are considered a high-risk driver, right?
Yes, she is.
I have my 5-year no claims. Excuse you.
Right. If you are considered a high-risk driver, one of the things that your advisor, your agent, your broker can negotiate on your behalf is to one. So it is a balancing act, because the insurance company can either decline you or they can rate you heavily, meaning that they can take your premium up, right? So you have a balancing act. You can either have a high premium and a low excess, or a higher excess and a lower premium. But I do not know that they're going to eliminate the excess altogether.
Not eliminate.
That'd be nice, but
not eliminate. I'm saying, okay, forget it. It would.
You're saying to provide that avenue so that you can save that excess if necessary.
Yes. So let's say you get insurance. So most insurance companies right now will tell you, frankly, like, you can pay this off in 12 months or whatever months or what have you. I usually try to pay off in 3 months or 2 months. I don't like that, right? But let's say you have to pay 100 and something. Let's say you have $150 a month for your insurance. Then you pay 200. That $50 goes towards your excess fund.
Yeah.
The insurance has this money to use. That's what I'm saying. It literally the insurance company having this money to use.
But I don't want the insurance company having that money though. I want you to have the money so that you can make the interest on the money saved.
I'm saying.
Yeah.
But they can offer interest. I'm saying.
She's just concerned because this is a problem. This is a perennial issue with her.
They don't have No, let's not choose Jamar. They don't have access to Terry stop. Anyway, hi mom. Betty's saying she's listening to her son Jamar. She's very proud of you. That's how we all feel about our
Oh,
sons
she's
and
here. That's
daughters.
nice. Hi, Betty.
Me, mommy.
Hi, mommy. Let's talk to Betty too.
Oh Lord.
He's a man now. Don't mind me. Go ahead, Jamar.
All right. So what we're talking about cash management and budgeting.
Cash management and budgeting.
Yeah,
That's
cash
net.
management.
Yes.
Mhm.
So I have a few tips on cash management and budgeting. One, I would suggest that you either download a budgeting app or a spreadsheet to manage
Excel.
your inflows and outflows on a monthly basis. And if you can do it on a weekly and daily basis, that's even better. So you want to look through like your online banking transactions at the end of each week
Mhm.
and update your
Mhm.
outflows and make this a habit, right? So that you will always be aware of your spending habits and how best to manage it.
Yep.
Then I also want you to consider having what I call a balanced budget. So you want to make a plan for every dollar you earn and allocate it. This does not mean that you're going to spend all your money or have $0 in your bank account, but it just means that you assigned all of your income to designated outflows. And an outflow can be saving and investing, right? So speaking of allocations, I also want you to allocate your budget into 4 categories. One, savings, retirement, and investing. I would say that should be at least 20% of your gross income.
Mhm.
Fixed expenses and utilities, that is about 30% of your gross income. If
It's
you
like
have,
60 right now.
pardon?
It's like 60% these utilities.
No, it shouldn't be that. At least 30%,
I was
or
joking.
start using
They're high.
80.
They're high.
Debt payments should not exceed 40%, but we also want to keep that as low as possible. So we want to reduce that down to 0 if possible, but not exceed 40%. I will explain later why. And discretionary spending. So we're talking about eating out, getting your hair done, your nails done, Netflix. That should be no more than 10% of your budget, your gross income. So these rules will assist you to allocate your surplus and be able to prioritize your budget in a more systematic and structured way. The other thing I would like to say is that you should always pay yourself first. So that 20% that I was talking about, the savings, retirement, and investing, you want to make sure you have short-term and long-term savings in your budget allocations. So we're talking about retirement and investment planning. So make sure that that is a top priority. Pay yourself first. And the last budgeting tip that I always have is if you have debt, after you have paid yourself first, make reducing debt your next priority. So you want to utilize several debt reducing and debt saving methods to reduce your debt, to keep your debt at an all-time low. Therefore, you will have more money to save and invest. Right.
What are
And
some
you
of
will
these debt
start with the
reducing
most.
methods? Sorry, go ahead, Terry.
That's in the next slide.
Well, I was just gonna make a comment again on what Jamar just
Yeah.
said. With regards to reducing debt, you want to start by paying down the most expensive debt first, right? So I know a lot of people, they go and try to run off and pay off the mortgage. Mortgage debt is incredibly cheap. It doesn't make sense to pay that off. If you have credit card debt, through the roof, pay credit card first. Pay these most expensive debts first. I also wanted to make another comment with respect to setting up the budget. Now, Jamar said, set up this budget, in Excel or something. I cannot impress upon the audience and people who end up listening to the podcast version how important it is to actually do this. I do it right every single week. I'm checking my app and I'm checking my Excel budget, making sure that everything is fine, and it helps me to essentially plan my affairs very effectively. And so yeah, just definitely do it, guys. You can do it on a weekly basis. Like I do it on a weekly basis. I set up a month, weekly basis. And also just remember to include your annual expenses and your annual income, because of course
That's correct.
you complete income, but sometimes you get, if you work like me or like Ayo, maybe you get inflows on a staggered basis throughout the year. Include those
Dividends.
budgets.
Yeah. Well, that's a good segue into the next segment, which is debt management. So the debt management strategy that Terry was just describing is called the debt avalanche method of reducing debt. So what that basically is that you will list your debts from the highest interest rate to the lowest interest rate, and you would devote any extra money on a monthly basis to paying the highest interest debt first while making minimum payments to the other debts. So once that highest debt is paid off, you then start putting extra money towards paying off the second highest interest debt while continuing to pay minimum payments to the other debts. And you continue that process and continue that process until all of your debts are paid off. So what Terry was basically saying is that consumer debt is bad debt. So you can categorize good debt and bad debt. So the higher the interest rate, the worse it is. So credit cards, line of credit, any form of revolving loans, hire purchase agreements, those usually carry high interest rates. So those are the debts that you want to attack first. Now the debt avalanche method is one of the is not the fastest way to reduce debt, but it's definitely the way that saves you the most money, right?
Right.
No, the debt snowball method is the fastest way to reduce debt, and that is very similar, where you now categorize your debts from smallest to largest, and you allocate additional funds to the smallest debt first and pay off the rest of your debt using the minimum required payments for your other debts. So as you reduce that small debt or the smallest balance first, you then go to the second smallest balance and you continue to pay minimum payments towards the other debts until all of your debts are then reduced. You would reduce debt faster that way, but the debt avalanche method would save you more money. So it all depends on what you want to do.
Yeah, notice here, guys, that the mortgage is not going to be prioritized on the snowball nor the avalanche method.
Nor the avalanche. If you want to reduce your mortgage quickly, I will go straight into. I know I hop in up and down on the list, but if you want to reduce your mortgage quickly, one of the debt reducing methods that you can use is the biweekly payment method. So this allows you to pay your mortgage every 2 weeks rather than once a month. So what will happen is that every 2 weeks you would pay, like, say your mortgage, I use very simple figures. Say your mortgage is $1,000 a month. On the 15th of the month, you pay $500. On the 30th of the month, you pay $500. What that would do is that would reduce your interest and principal faster. And instead of allocating $12,000, $1,000 payments towards the mortgage in 1 year, 1 calendar year, you would essentially be paying 26 payments because we have 52 months. Sorry, weeks. What am I talking? 52 weeks in a year, right? So so the net effect of that is that, like, say if you had a 30-year mortgage, by just paying bi-weekly payments, you can actually reduce your mortgage by 5 years. So you can move a 30-year mortgage down to a 25-year mortgage just by the way, right? And the last one that
what are the benefits to that? What are the benefits to reducing your mortgage from 30 years to 25 years, 25 years?
Interest. You save tons of money on interest.
Right.
So
yeah. And the strategy that Jamar is suggesting doesn't actually require you to spend any more towards paying off your mortgage, right? It's just you're just paying the mortgage at shorter intervals, bi-weekly, as opposed to.
Dan has a very good question, because I myself, I'm a contractual worker also. So he's asking, so far Jamar has been giving guidance to persons who have a monthly or a fixed income. How would you advise a person with irregular income, like self-employed persons or income from some contractual work? Because a lot of times, obviously your financial advisor would advise you well, just make sure you decide what salary you want per month and pay yourself per month, and but it does get a little bit tedious to do that sometimes, depending on how the contracts are coming, and all these other things is not necessarily as clear cut as that. What is your best advice for those persons with that type of income?
To be honest, it's hard. I Terry will have to help me here, but I don't really have a straightforward answer. The only answer that I can possibly give is that when you do get your lump sums, that you try to pay yourself first and try to get that 6 month emergency savings intact, so that even when you are short 1 month because you may not get a contract 1 or 2 months, you can at least still have that surplus in your emergency savings to still do the quote unquote monthly things that you're supposed to do. And then when you do get that big check at the end of the third month, you then replenish your emergency savings and go again. So you will have to manage it a little better, but I really and truly don't have any other profound answers apart from that, apart from saving.
As Jamar said, it's going to be a lot harder, and I think this. It's harder to manage money when you're getting this irregular.
I talk to you all the time about it, Terry.
Yeah. Well, I mean, it's harder.
What I do with though is I make sure that I have very little debt. I keep my debt to the lowest possible minimum, and things that people would generally buy from a store or what have you, I may buy it from an auction when the hotels are selling out or something. Therefore, you get it cheaper. You make a one-time payment. That's it. You have to look at that again. And obviously, you buy a used car. You don't buy a brand new car. You know what I mean? And things like that. Just keep your debt very low. I think
very low
works best for me. So you always have money to pay food and pay these light bills and these types of things that you can't.
And so in that case, you have to, as I was saying, it's best to stay with that. Of course, you may not always be able to, but I think the idea of making purchases like for cash is very important. Stay with that as much as possible. And of course, since it's harder, that means you have to put more effort into managing your money like a hawk. You have to watch your money like a hawk. Remember, the Prime Minister always says, "Drunk or sober, mind your business." She's not meaning don't be gypsy. She means mind your affairs. No matter what happens, mind your affairs. So in that case, budgeting becomes more critical because you're no longer receiving these monthly income that you sure is coming. You're receiving likely inflows on irregular periods, and so you need to forecast that, and you need to obviously, as best as you can, apportion that across the year, and then try to allocate it to the various insurance products that Jamar is talking about. Maybe endowment plan. Definitely planning for your pension now becomes even more critical because you no longer have a company that's kind of doing that on your behalf behind the scenes in whatever HR is really doing. You're not going to have to plan now very particularly for your retirement. So this will need taking out like certain types of plans, which I'm sure Jamar will get to at some point in the presentation.
One of the other things that I missed out, let's jump back into. Pardon?
No, just saying good question from the audience.
Yeah.
Yes, it was a very good question. One of the other things that I missed out on when we were talking about cash management as well is how to use your credit card. I think that's also very important, and I kind of glossed over, skipped it. One of the lessons that I want everybody to take away: credit cards can be useful to earn points and airline miles, etc., etc. So if you can have a reward based card, that's good. But I will always say, do not spend what you cannot afford to buy. So if you are going to spend $100 on your credit card, we all have online banking now, at least you should. Make sure that $100 has to be on your savings account so that you can transfer that money immediately, not tomorrow, immediately to your credit card. So your credit card will not accumulate that high interest, and you will be able to still benefit from whatever rewards you may get from the card. If you are in a position where you recognize that you have to be spending your spending your credit using your card, that is not a good position to be in. So if you can't trust yourself to pay yourself, I would say get rid of it.
Use the scissors.
Yeah. The last debt reduction and elimination strategy that I want to touch is debt consolidation. So that one is, if you're saddled with all kinds of debts with various interest rates and repayments, you may want to consider consolidating your debt into a single liability, which will have a more favorable payoff term, right? So we are looking at lower interest rates, lower monthly payments, and in turn, it would give you a lot more disposable income to save as well. All right, so that is it for debt strategies. Debt service ratio. What is your total debt service ratio? So the term total debt service ratio really refers to the management of the measurement that financial lenders use to determine what portion of your gross income is already spent for servicing debt, right? So lenders will consider each potential borrower's credit and balances, right? So we're talking about higher purchase loans, car loans, any monthly obligations that you have that goes towards debt is considered in your debt service ratio. And then what the bank do is that they use a benchmark to decide whether or not they're going to extend further credit to you. So in Barbados, the benchmark for that is 40%. Your total debt service ratio should not exceed 40%. To break that down, you should not be spending more than 40% of your gross income to service debt, right? If you are at 40% or close to 40%, it significantly reduces your borrowing power. And to tie into that, we also have to be aware that we do have a credit score company in Barbados, the Barbados Credit Bureau. So what your credit score is it measures how likely are you able to pay back a loan on time. So the scoring model uses information on your credit report to determine what the score would be. So the credit score report would determine stuff like your bill paying history, your current unpaid debt, the number and type of loans you have. What was the amount that you have available in unpaid debt, and whether or not you were sent to a debt collection or foreclosure agency in the past, and how long ago that was done. So as I would have said, when you approach a company for a mortgage, land loan, car loan, etc., in the background, they would consult with the Barbados Credit Bureau Association, and they would ask for your score report. And based on the information that is then reported, you can either have a very good score or a lower score. And that would also determine whether or not the lender would extend a further facility to you. So when you are in the market for borrowing for a mortgage or land loan or any other type of loan, you have to keep those two things in mind: your total debt service ratio and your credit score. So make sure you don't saddle yourself with too much debt, one, and two, make sure that you also pay your debts on time, and you keep the facilities in good order.
That's a good way to manage your credit card. When it's saying that he will put the money on the credit card, if the groceries are $300, he just put $300 on, and then buy the groceries rather than buy the groceries and then try to pay off, which is a good way to manage it. But I mean, you can also do that with a debit, Visa debit, and you have the money there, whatever.
Yeah, I don't have credit. I don't have a credit card for that very reason, right? Not that I don't trust myself, but I don't trust myself.
We know you cheat, money man tags. We understand.
Well, call it cheat. Call it what you will. I have what we was talking about earlier: setting goals and devising strategies to achieve these goals. Well, spend my money on wildly is not conducive to my strategy.
Mm-hmm.
Agreed.
Yeah, makes sense to me. So, any questions on debt reduction strategies, debt service ratio, debt score reports, anything like that? Or you're ready to move on?
Yes, we don't have any questions on it right now. I guess it's a good segue to the next topic that you wanted to present on, which is financial planning for home ownership. So if your debt service ratio is very high, then I'm assuming this affects this next section, right?
Yes, it does. So financial planning for home ownership. What I also do is that when I meet with my clients, I also, if they're in the market for this, that is, or if they have a financial goal to own their own home sometime, even if they're not ready, I can tell them what they need to do to prepare to get ready, right? So one of the things that we will look at is, well, I can't do your credit score. Only credit bureau can really do that. But I would look at your debt service ratio to see, one, if you can afford to if you have the bandwidth to accommodate a monthly mortgage in your budget. But then I will also go through the prerequisite documents that they need. So sorry, before we get prerequisite documents, to pre-qualify, we looking at it. I said the credit score, the total debt service ratio. We also will look at your job experience. Most lenders will not lend if you have not been in your job for at least 2 years. Or if you're self-employed, if you are not operating for at least 2 to 3 years, right? And we also will look at your savings. We also want to make sure that you can afford the expenses, the expected expenses that will come along with home ownership and acquiring land. So then we will look at, I would let them know once they qualify what prerequisite documents we would need to submit. So I would need your KYC and compliance information, which would basically be your ID information, proof of address, job letters, pay slips, statements showing your savings and any liabilities that you may have. We're gonna some institutions may ask you, the customer, to get your own credit bureau report for that score, or they can do it themselves. You also need to provide the purchase or offer agreement from the vendor, whoever you're buying the property from. The land tax, a copy of the latest land tax statement. You may need to do a valuator's report if you are buying a home, or a quantity surveyor's report if you're building a home. Then if you're building, you also need to submit like your contractor's building estimate, town and country planning approvals, etc., etc. It goes on, but I make sure that I at least leave you with all of this information so that you would know exactly what you need to put together in order to get this application going. So what are some of the expenses that you can expect? Some institutions lend at 100%, some don't. At Sagicor, we do 95% financing for mortgages and 90% financing for land loans. And what that means is that you would need to find 5% if you're doing a 5% deposit if you're going to do a mortgage, or 10% if you're going to do a land loan. You also need to consider if the financial institution is going to charge a mortgage commitment fee. That's usually 1% of the amount borrowed. We also do legal fees. I can calculate the legal fees for you right away. The various insurance premiums. So we're talking about mortgage indemnity insurance, life insurance, builders under construction insurance, home insurance, right? You're looking at your evaluators and quantity surveyors fees, draftsmen or architect fees, town and country planning approvals, utility installation fees, industrial cleaning fees, furniture, appliances, and the list goes on, right? So
IOP, the IOP, where the IOP is?
The IOP?
He called that already.
Oh, he called out. Okay.
Yeah. Mm-hmm.
And one of the things that I always tell people too, because I'm a realtor also, is make sure you know how much you qualify for.
Yeah. Yeah. Right. So that's one of the first things I do. I go through their finances, look at their total debt service ratio, based on their budget and their gross income, their present liabilities, work out how much they qualify for. Right. Some useful tips.
Interest rate?
Pardon?
What is your interest rate for mortgages, or does it vary?
Oh, the interest rate for our mortgage is 3.5%, 3.5%, and the interest rate for the land loans is 5.5%.
That's pretty good.
Yeah, it's a good rate. Some useful tips. A lot of people don't know about the VAT rebate. So properties that are valued $400,000 or less gets a VAT rebate by applying to the Barbados Revenue Authority for your first home. So this is only for first-time home owners. The rebate would be applied to the value of $200,000. Sorry, if a rebate is applied to $200,000, the rate would be 7%. So 7% of $200,000 is $14,000. So you will apply for this the next year after you finish construction or buying the home through your TAMIS report, and you will get back that rebate. Another tip would be for anyone who owns a registered retirement savings plan. You can actually make a tax-free withdrawal from that plan for up to $25,000 if you do have that money in the plan, without any withholding tax penalties. So that's also a good way to save and acquire your deposits. And I don't know if this is just a promise or if this is actually going to be something that will come to fruition, but the government did promise a $3,000 grant for first-time homeowners that are 35 or under as a subsidy.
It's 3,000. I thought it was like $5,000, $10,000.
It's 3,000.
I was hoping it was
whatever.
Yeah,
that's true. Much more than you had before.
So yeah. So I mean, you could use that $3,000 for the same deposit or put towards the legal fees or whatever you want to do with it. I think they're flexible.
Legal fees ain't $3,000.
It's a drop in the bucket, but it was still, it was still help. Yeah,
it would help.
So just to to go over that, you're looking at the VAT rebate. You want to apply for your VAT rebate if you're a first-time homeowner. You also want to take advantage of the tax-free withdrawal if you do have a RSP. And if you're under 35 and under, knock on the government's door and ask for that grant. But here at Blackman Insurance, we try to make sure that we can take the client from not knowing anything about planning for financial home ownership to actually getting them in their own home. So I've done a few mortgages and land loans before. So if you have an interest in that, you can always give me a call and I will help you with that.
Mm-hmm. I have a question from Wayne. I'm very interested in this question too. At what point does the government disperse that 3,000?
I don't know, Wayne.
Well, you don't find out. You need to find out, Jamar.
You gotta ask Auntie Mia.
Shut up, no catch, no fly away. You gotta ask for your money.
Yeah, I know.
Right. We gonna have Auntie Mia on next week, man. We gotta find out. We gotta get people.
That's a question to ask Auntie Mia. I don't know. I think it's a good initiative.
Of course,
$3,000, as you said, is just a drop in the bucket, but at least it's $3,000 you don't gotta look for whatever.
$3,000 more than they were offering last year.
That's correct. So take it and run with it.
We ain't gonna get your money. Don't mind these people.
I want it to. We need to get this money.
Area gotta be 35 and under though.
I am 35. I am 35. I don't like you. I know you're 30, and I know that's what you keep on saying to people. And I know,
obviously,
I know a few people might believe it, but I'm still 35.
Yeah.
Next question to Wayne, please. I mean to Jamar, please. Sorry, Jamar.
So Jamar, she keeps on confusing you with it. Yeah, go ahead.
So just wrapping it all together, we spoke about risk management and that safety net, the foundation of your your financial journey. So you gotta make sure that that's sturdy, right? And then we also talk about debt elimination or reduction. So you want to keep that debt as low as possible. And we then spoke about home ownership and what we need to do, to get your own home and that kind of stuff. But then the real meat of the matter is that after you have saved, this is just my opinion. I think that before we start to look at wealth accumulation and investment planning, you should at least start by saving that emergency fund first, right?
Right.
Have that covered first, because you don't want to be rolling around in your bed at night thinking about the investment that you made yesterday because you need it back tomorrow to pay the light bill. Right?
Can't afford to
You do not want to be in that position.
Yeah.
So, and you also do not want to be in a position where you have what I call excess liquidity. So you don't want, if your 6-month savings goal is $20,000, $30,000, you don't want to have $150,000 on your bank account. That does not make sense in my opinion. The average inflation rate in Barbados is 3%, right, on an annual basis.
That's
so that
awful.
means
that was before this war. Because
before this war, we'll have to do another reassessment.
Yeah,
But
I think it can be closer to double digit by the end of this whole thing. Go ahead.
But over the last 10 years, the average rate was like 3%. So if we conservatively to your point, if we conservatively say it's 3%, and you are saving at the credit union or a commercial bank at less than 0%, you're really doing yourself a disservice. So
if you go to the banks, it might be negative because they charge you all these fees to have your money saved with them and to get access to your money. So I recommend you go to credit union. At least you might get like something with the banks. The bank interest rates effectively are negative, in my opinion. But go ahead, sorry.
And that is why I said out of the 6-month savings, put 1 month on your checking account to take care of your day-to-day spending, and 5 months on your credit union account to keep the costs down. So to my point, you want to have access to that 6-month saving that in the event of an emergency, but you do not want excess liquidity. You don't want too much money in your savings, because you're not multiplying that money at a rate that would earn you interest over the inflation rate, which is 3%. So what do? You try to then, once you've secured that 6-month savings, you then try to find financial instruments that can give you a return of 3% or more, 4%, 5%, 6%. You go down the road. So what is investing? Investing is the art of allocating money with an expectation of a long term future income or profit, right? So when you're thinking about investing, first set aside that 6 months. Then we need to assess your risk tolerance. So generally speaking, investments offer different risk and reward levels. So you need to find out what's the best risk reward mix for you. So
I put all my money in Bitcoin. Can I put all my money in Bitcoin?
You want all your money in Bitcoin? Well, you pretty risky.
All right.
Right. So what's the best risk reward strategy for you? And that is really determining like what's your risk tolerance. So you want to be able to answer a few questions. Like, how far away are you from retirement? So your age has a lot to do with it. You don't really want to be taking risky investments when you're close to retirement. The other question is, how much have you saved and invested so far? What was your investment portfolio? What does your investment portfolio look like? Do you have any investments? Do you have a lot of assets? What was that like? And then the other part is the psychological part. Are you comfortable taking high levels of risk, right? and that would determine whether you have a low, medium, or high risk tolerance. But I would always advise. I am not an investment analyst. I am just a financial advisor. It's different, so that's a different specialty. So I will always advise that you speak to an investment analyst about determining your risk tolerance. But
Yes.
after you've determined your risk tolerance, you then decide how you're going to um, allocate your risks. So are you going to allocate your risk more in equities or bonds or cash? And that would determine the types of investment tools that you would use to spread your risk. And I'm sure Terry would agree. You shouldn't put all of your eggs in one basket. So the foolishness that he was talking about putting all his money in cryptocurrency
Yeah,
is
no, this is not financial advice.
yes, this is
And
not financial advice. Don't
do
call
not
my
do
lawyer.
not come do not come suing me later. But yes, no, you should not put, irrespective of how risk-seeking you are, don't put all your money into any one asset class. Me and I will have this discussion this earlier today. There is a benefit to diversification, of course, right? You don't want to put all your, the saying, you don't want to put your eggs in one basket.
That's correct.
There's a benefit of diversification. Of course, if you're on the more thrill-seeking side, cryptocurrency provides this like me, it provides this hedge against the broader market. Its utility is that of a hedge. This is not financial advice, but definitely you want to invest in a broad basket of assets that will give you more stable returns.
That's correct. So that broad basket can include retirement savings plans, mutual funds, real estate, bonds, peer-to-peer lending, stocks, or investment in small businesses. I I would assume if anyone in the audience don't know what any of those things are, I would be happy to explain. But the point is, you want to check those out. Uh, I would say if I and this is not financial advice. But I would say, like you should start with low risk investments first, and then get a feel for what your tolerance is like. So you may want to start with an endowment plan. So an endowment plan is a life insurance policy that guarantees you a lump sum at a set age or a set time. So and that is governed by law. That's set into stone. So for example, if you have a life insurance endowment policy and you have one for 250,000 and it's to age 65, you will get that $250,000 at age 65 as long as you continue to pay that premium. Interest rates will not factor in to so you wouldn't have any hills and valleys with that. So that's there. And then you look at your retirement savings plans and your mutual funds, get some real estate, bonds. To me, those are very low risk and kind of moderate investments. But then when you go into the peer-to-peer lending, the stocks and small business, you're going into the medium to high risk investments.
Is it still a good idea to get government bonds?
Ask Terry that, not me.
Yeah, well, if you're in Barbados, well, maybe Barbados government defaulted on government debt.
Yes.
Okay, so put that. Just remember that happened. That is not supposed to happen. Government is not supposed to default on debt, particularly not things like T-bills, which are more or less treated like cash. I don't think it was the wisest thing, but it's the government defaulted on the debt. In general, I understand the need to renegotiate the debt, but this happened. So then we have the boss bonds. The government is now issuing a new set of bonds, and whether these are good investments or not is up to you and your financial advisor to determine. If I were in Barbados, and given the limitations when it comes to investing in Barbados, the boss bonds do seem to me to be a very good asset class to invest in, to be honest with you, right? So I'm bearing in mind that I know everything happened in the past, but the boss bonds, given their risk return, seem to me to be a good investment. Not financial advice. Speak with your financial advisor about whether you should be investing in government paper at all in Barbados, given what happened. But yeah. But just to answer your question, I think they're pretty stable. If it were in Barbados, I definitely would own some. But I'm not there with you guys. I get to play in other markets.
Yeah.
Where governments don't default.
I just wanted to answer that question because a lot of people are saying, "Buying a government paper."
Well, I mean, what are you going to put your money on? What are you going to put your money in the bank where you're effectively paying negative? You're actually paying to keep your money there because of the fees. You're going to put maybe the credit union is better, but guess what? The credit unions invest in it, guys. They can't just keep your money there. Your money
and
has
they probably
to be
buy the bonds too.
not probably they are right. So yes. So and of course they're not going to give you the full return. They're going to obviously keep a spread for themselves. So you need to decide with your financial advisor and whether
That's
you
why
want
I'm asking you, Terry. But anyhow, you're in this. As though you're asking somebody strange. I
You're
asking my
asking him in public.
You're asking me if,
He's like, but you don't ask me. Okay, all right, no problem.
hey.
Call Guardian or
Nobody is suing me saying, "Oh, Terry, I put all my money in these bonds that you tell me to invest in, and the government gone and default." I don't think it'll happen again, but I don't know. So
I'm just joking.
Of course.
Gotcha. Lovely. It is a personal choice. Don't mind my jokes. But it's one that's made with the information, with being informed that we did have that experience, and I too feel like it shouldn't have happened. It is something that we should have avoided at all costs because
I mean, we can understand. Yeah, we can understand how it happened. I think with respect to like the defaulting on, but my peeve was really with the T-bills. I didn't think the government should have the short-term debt instruments. I think those really should not have been. The government should not have defaulted on those, but it happened and it's passed, and we're actually better off as a result of the entire idea of renegotiating the debt. That's a sound idea. We had to do it. So we can
well, let's hope it never happens again.
Yeah, we can nitpick about it, but overall, we are obviously in better economic management now than we were before. And the reason why we had to be in that position is because of the bad economic management that was happening before. So you can't really be too critical of the government policy. But with respect to
you're a pensioner though, and you had a huge investment in them, of course you can be very critical. Because a lot of pensioners and stuff had those bonds and stuff specifically for when they retired. So we can't be critical because we're still young and we can make some money still. Just pointing it out there. Yeah. But yeah, that's my point. All right, Jamar.
Yes.
I don't want to continue to hold Terry to task on this.
Right. So what's the purpose? Yes. I just wanted to end off this slide by bringing it home and say the purpose of accumulating wealth and investment is so one, you can enjoy your life while you're living. You're not only you're investing with certain financial goals in mind, and also you want to be able to enjoy your retirement and be able to maintain your lifestyle within your golden years, right? So a lot of people, when I meet with people, I also would calculate how much money they need to accumulate in wealth based on their present income between now and 65. And the average person would need about $1.5 to $2 million Barbados dollars, right? So when you consider having a basket of $1.5 to $2 million in investments, you really got to ask yourself, where am I getting that from? One. And two, a lot of people have this false hope that NAS is going to do it all. And you are not getting close to $1.5 to $2 million in accumulated lump sum from the NAS. So you need to take it seriously. First, get that 6-month savings going, and then start to look to invest to, one, enjoy your lifestyle, and two, be able to enjoy your golden years and beyond, right? So, because you may also want to leave some money behind for your loved ones, some assets behind for your loved ones. So, and that is a good segue to the next slide, which is the final slide for the evening. And so, remember, it's a 5-step process, and the last step in this 5-step process is wealth distribution and estate planning. So you want to make sure that you have your wills, your trusts, and if you want to do some charitable giving, and if you have a small business, putting plans in place for business continuity planning and stuff like that. So of course, we will know the will is a document that would set forth your wishes of how you want to distribute your property and your assets, right? And the trust would be a fiduciary relationship between you and a third party, where that person will have a legal responsibility to distribute your assets how you want them to be distributed, right? And then charitable giving is pretty self-explanatory. You'll be given to primarily nonprofit organizations to help accomplish its goals. And business continuity, again, pretty self-explanatory. You want to make sure that you have systems in place to prevent any loss in the event that a key person dies, or in the event of a disaster, right? So when you accumulate all this wealth and all these assets throughout your lifetime, you're not going to be on this earth forever. So you always have to have plans in place to make sure that your assets are distributed the way you want them to be distributed, and so that the family won't be fighting up and they don't got the family noise. But all of these things encompass what your financial journey should be, where you should be looking at, whether you are 20 years old or 60 years old. It it touches every aspect that you should cover throughout your journey. And as I would have said earlier, we have the proprietary software to pull all of this information when I do my consultations, to pull all of this information in to my software, and I'm then able to create reports, comprehensive reports that touches every aspect of everything that we spoke about this evening, and so that you will have this document that would that you can take with you to the lawyer's office or to your family and show them, listen, this is what I have going on. Or you could use it as a roadmap, as a plan to get to the next step, right? So that's basically it from me as far as my presentation is concerned. I hope
Just
it
a
was
question.
useful. Yeah, go ahead.
A question from the audience before, because I see you trying to tidy up. When again is asking, he said, earlier Ayo brought up the issue of mistrust among citizens as it relates to insurance services. What do you do on your one part, Jamar, to bring about that trust and understanding of the insurance industry to potential clients? Also, do you do public education tips to help with distrust issues? And there is a huge distrust of insurance and anything outside of car insurance. And sometimes some people tell you, well, I only get car insurance because I have to, and they only get the insurance that they have to get when they're at the point of purchase of the home. And outside of that, they basically don't get anything else because they see insurance basically as not as an investment, not as the investment that it is, but as a way of extracting their monies. So
I would say, okay, from as I would have said when I first joined the call, I was in the industry since I was a teenager. But I actually joined Sagicor in 2009. And it's in 2009. So prior to 2009, I primarily was in the general insurance industry, right? So home, motor, etc. But when I joined Sagicor as a Sagicor advisor in 2009, then I got into the financial planning and advisory aspect. So everything that we basically covered today. And in 2009 was when Clico collapsed. So I'm saying that to say, like, from the very beginning of my Sagicor career to now, which is 12 and a half years later, I've had to basically face and answer very tough questions from clients. And what I've recognized worked for me over the years is just being upfront, honest, and educate the clients. Um, I read the fine print with the clients. So I try to make sure that we cover all bases. In addition to that, I would say that before, when people had this distrust in the insurance companies, we did not have the Financial Services Commission, and now we do. And trust me, over the years, the kind of paperwork that I have to do at my desk to get any insurance policy, to onboard any insurance policy, is horrendous. We're talking about, like, on average 36 pages per application of information, right? So I would say that the insurers are doing their due diligence to onboard good policies. The FSC is also doing a lot of due diligence to make sure that if there are new policies in the market, that they put the insurance companies through the fire just to make sure that there are sound policies that are coming onto the market. But I know, being asked what is Jamar doing, I would say that Jamar tries his best to be honest and actually educate. And to me, that's the only way to really combat that. So I try to make sure that my clients do not get any surprises, so to speak, right? And to me, that's the only way you could do it. So I hope that answered his question.
I hope so too. Jamar, thank you so much for.
You're welcome.
Is there anything that you want to leave with us before you go? Just take 15 seconds or so and say.
No, I would just say that if anyone want to contact me, they can contact me at Blackman Insure on our Instagram, Facebook, or LinkedIn pages. Or if they want to book an appointment, they could call us at 230-0917. And they can either book their appointments on the social media pages with our now buttons, or we can assist them via telephone. So if you book your appointment online, you will see my schedule, and you will be able to book an appointment at your convenience, and we'll be able to walk you through your financial journey as we did today.
Excellent. Terry, anything from you before we go?
I just want to thank Jamar for coming and sharing with us. Financial planning is very important. Budgeting is very important. Ensuring that you take out insurance, so that's ensuring with the E, to ensure that you take out insurance with an I is particularly important, right? So just to make sure that you are able to mitigate the risk that you're going. Life is full of risk. And the only thing we can try to do is try to avoid certain risks. There's certain risks we can avoid. Unavoidable risks, we have to try to mitigate it. And if you can't afford the loss, then chances are you should be trying to insure against the loss to recover it. Also, with respect to your financial situation, try to stay away from the credit card debt. That's why I do it. I just don't have credit cards. And try to ensure that you pay off the most expensive. My strategy, most expensive debt first. This may mean, hold off on the mortgage. The mortgage is not that expensive in terms of an interest rate perspective. But definitely credit card debt, consumer debt, car loans, these things need to be paid as quickly as you can. So thanks, Jamar, for sharing all that. I hope that individuals took it seriously, because it's very important, particularly at this point in time in our history, in the world history, actually, where we're facing tough times. We have to be honest about it, not just Barbados, but the entire world. And at this point in time, you're going to have to watch your money like a hawk. You have to watch your affairs like a hawk. And as the Prime Minister says, Jocko Sober, mind your business, and your business will be your financial affairs. So just leave it there. Thanks, Jamar, again. Thanks to the audience for being here with us.
Thank you too.
Thank you both. And thank those of you on the stream who took the time to join us today. Thank you so much for coming here and for sharing your comments with us and your questions. And I always say, we know you definitely have choices. Some of you are where I wanted to be today, but I had to be here. I'll go over and see if they're finishing up. But anyway, and those of you who are new here, subscribe now. Turn on your notifications. And if you enjoy
I was not aware of any of this. You want to spend your time with someone other than this is ridiculous.
Can I close the show? I wanted to be here. I was here.
I don't have a choice. Anyway, go ahead.
Please share this page, invite your friends, and join us right here next Sunday. Please live long and prosper.
Just Politics,
Bye.
Our Worldview, live on Facebook every Sunday from 5 p.m. till 7. It's the podcast about politics in Barbados, the region, and the wider world. Now, here are your hosts, Ayo and Terry. Thanks for watching Just Politics, Our Worldview. You can find us on Facebook and YouTube at JP, Our Worldview. And don't forget to like, subscribe, and smash the notification bell so you'll know when we upload new content. Join us next time.